So have you been keeping an eye on mortgage rates lately? Now, I'm quite sure you have, especially if you're planning to buy or sell a house, because mortgage rates, they have such a big impact on what you can afford in your mortgage payment. So it's really critical that you understand how they work. Now, before we dive into this topic, could you do me a huge favor? Could you hit the like button and subscribe to this channel? Because the more we know, the more we grow and the better we can serve our community. So I really appreciate your support and thank you so much for that. So what's going on with mortgage rates right now? Well, the good news is that they have been decreasing. I mean, we're looking at 6.5%. That's where we are right now, but we don't want to get too excited because we all know that mortgage rates, they can be a bit unpredictable. They go up, then they go down. It's like being on a roller coaster because they are influenced by so many factors that are happening in our economy. Right now, we're looking at the election, the job market, inflation, and decisions made by the Federal Reserve. They all play a role in this. So even as rates drop, they can still fluctuate based on the latest economic data that's happening. So here's a quote from Odetta Cucci. She's the Deputy Chief Economist at First American. And here you go. The ongoing declaration in inflation coupled by the Federal Reserve's recent indication of potential rate cuts in 2024 suggests an environment supportive of modest decline in mortgage rates. Bearing any unforeseen circumstances and resurgence in inflation, lower mortgage rates could be on the horizon, but the journey towards them might be slow and bumpy, unquote. So, what does Odetta Cucci mean when she talks about mortgage rates? Basically, what she's saying is that as inflation slows down and the Federal Reserve considers lowering interest rates in the future, we could see mortgage rates gradually decrease as well. Now, the process might not be smooth or happen overnight, certainly not that, but rates could go up and down along the way because they're influenced by a lot of different factors that are happening in our economy. So while mortgage rates are possible, we might see some bumps on the road to get there. But it's very important that you stay informed and be prepared for some of the fluctuations before rates start to settle down. Now, when mortgage rates change, it directly affects how much you pay each month for your loan. So even a tiny change in the rate can be a big difference in your mortgage payment. So I want you to take a look. Let's say, for example, you're comfortable with a mortgage payment of $2,600. A shift in the mortgage rate could mean the difference between affording a little more or needing to cut back. You have to understand this because it helps you to make a better decision when it comes to buying a home that wouldn't take you over your budget. Now, I want you to take a look at this chart. It shows how different mortgage rates can impact your monthly payment. So the green part in this chart, it shows payments in the range based on the mortgage rate. So let's go to 6.5% because that's where we are today. And if you follow the chart to the loan amount, you can see the difference in payment on principal and interest only. Now, this does not include taxes and insurance, which is part of your mortgage payment, and it will make your payment higher than this. So how can you keep up with the latest mortgage rates? Well, that's where your trusted real estate agent comes in. We have the expertise to help you understand what's happening in the market and what it means for you. So we can provide you with the tools and the visuals like the chart I just showed you to help you see how rates could change, actually could impact your buying power. So I want to wrap things up right now. If you have any questions about the housing market, I am here and I'll make sure you stay informed and ready to make the best decision in the market. So I want to thank you for watching. I am Denise Watkins, and don't forget to join me next week, and bye for now.